investors shrugging off global trade concerns, as sometimes they do, sometimes they decide not to. Why are they ignoring it today?
I think it's because they're saying this unpredictable Donald Trump, is becoming predictable. He's sort of barking very loud and really throwing everything at it, and then actually he's there to make a deal, and therefore I think markets are just not believing that this is actually going to happen, or having collateral damage risk to the global economy. I'm not so sure.
You think there might be collateral damage?
Well, I just don't think that they can fine-tune it to the point where it doesn't create for the US the same negative consequences that we've had from Brexit in the UK, i.e. trade conditions going forward are a lot less certain for a lot of industrial companies in the US.
And what does that mean for asset allocation?
Well, at the moment, it actually doesn't mean very much yet, but it might well. I mean, at the moment,
can you position ahead of it, or is it just too early? It's tricky.
It's a little bit early at the moment, but we are certainly concerned how he's playing it.
Let's talk about Italy, Spain. What a week. Yes. Crazy week. Seems like a long time ago now, doesn't it? We have two new governments. I mean, who would have guessed it last Tuesday when it was going crazy? Should it have gone so crazy? One of your notes is the Italian job. Lovely stats, and I love my stats. 4% of global government debt, 2% of global GDP, yet Italy apparently caused bond markets around the world to take fright. True or false, you say? Answer your question.
Well, it has got it was a wake-up call for Europe. Not all is good. Europe, the Eurozone particularly, still has that inherent weakness of being a monetary union, but not really being a union. There's no solidarity between the countries. There's not a common bond market. There isn't a true European government bond, and all that puts countries at peril who are not playing the same game. And that's the fright, that whenever there is a political tendency that says this might be put under stress, then everybody goes, oh my God, there was something, wasn't there? And that's what we saw last week. I think overall it was a trigger point. It wasn't really about the Eurozone. It was about the bond markets repositioning after global growth came off its really strong growth that we had. And the equity market had already reacted, but we had not really seen the bond markets adjust to it. So I think that was the catalyst for that adjustment around the world, with the 10-year in the US coming off so markedly. Yeah,
but look at the yield spread, Lothar. Can we bring this up, guys? You know, it went up to 320 basis points. As I said, we've come down. I mean, does the populist government have scope now to cause further jitters, given that this is just the beginning of the adventure? We haven't even started yet. We've got the confidence vote, and then we've got what part of their proposals are they actually going to try and implement?
I think they had their little shock right at the start of what a little bit of loose policy can actually cause. And I think if you know Italy, you weren't quite so surprised about what happened last week, and you weren't quite so surprised that they did get a government in the end, at the end of the week. But I think it's been a good warning shot for both the populists but also the Europeans at Brussels, that, you know, they still have some work to do.
What about Brexit? We just had that announcement, Lothar, that the withdrawal bill, that massive piece of legislation which was amended a number of times in the House of Lords, it comes back. But this is the biggie. You can't run away any further. I mean, people say Theresa May is the queen of delay. She's delayed making all the big decisions. But this month, she's got the withdrawal bill and she's got that big EU leaders summit. I mean, this seems to be a very important month, doesn't it?
It is, and that's also why sterling is under pressure. And the Italian job last week was not really good news for Brexit, because now the Europeans in Brussels will be even more inclined to be playing tough and to show that remaining inside is always better than crashing out.
Yeah, we're just getting some breaking news, Lothar. The UK government is to dispose of about 7.7% of RBS Group. You'll remember RBS resolved its toxic loan issue with the US government a week or so ago. That removed a big overhang for the stock and led many to say it can now, or the government, which owns 70%, can reduce its stake and RBS can begin the process of restoring dividends. That was the talk after that resolution came into place a few weeks ago, and it has been confirmed. The government will dispose of about 7.7%, but you know, it's a massive stake, 70%. It's the beginning of the process, and it comes also as talk about replacing the CEO, and the CFO has begun. We know the CFO is leaving. The CEO is said to have left once he cleared that toxic loan issue. It's being cleared. So issues resolved, government will begin selling its stake. What tweaks are you making? What big investment decisions have you made recently, Lothar, and why?
At the moment, the bigger investment decision that we've made is to actually fill some of our underweight to US equities that we've had. We're going a bit more underweight in Asia, Southeast Asia, with China not growing quite as fast as may have been anticipated.
Don't be fooled by strength, you say. Are you a doom-monger when it comes to China? No.
Not really doom-monger, but at the same time, we're saying don't expect that incremental growth spurt from China this year. It's not going to happen. It's very unlikely to happen. China is going to grow nicely, but if you're looking for growth boost, it's not going to come from China this year.